All right. So we closed the day kind of right where I expected. I guess a little short of my expected move. But we managed to hold VWAP throughout the day and stayed under the 20 MA, which we'll take a look at in a second. Um, ES still really struggling with this 6,700 level. Feel like if we don't break it in the overnight, we're gonna go down. And then I'd be not really paying attention to 6680. I don't think that's that important, but I'd be looking a little bit further out at like 6645 for confirmation. I think if we lose 6645, we probably almost definitely fill the downside gap. I'm not sure how much of that we would fill. I think this closed at like 52. So there's some decent room down to fill that, or at least that like the overnight part of that. But even a retest here, I would look there for support or down here, in like the 65, like 50 range. Um, Dollar continued its march up. I mean, this is still being driven almost entirely geopolitically. So I don't think it's stopping anytime soon. Yields were unchanged because bond markets were closed. Looks like correlation pushed down today, but definitely not back to levels that we saw, just a couple days ago. And some of that correlation seemed to fall off into the end of the day. We do have earnings coming up, so there is a lot of market-wide incentive to push the dispersion trade. That is something that I would be wary of, especially if bank earnings are, as expected. Commodities up today, but almost entirely on the back of gold and silver, both of which had, gold with 3% returns, silver with 3.9% returns. Copper also up 4.77%. Looks like agricultural commodities running and oil running as well. I do think that some of the pump in gold and silver today is due to bond markets being closed and people still seeking some flight to safety from equities. Um, Obviously, bond volatility picked up pretty significantly last Friday. We may see that continue up tomorrow um, when that safe haven reopens and people can start trading on it again. Leverage at the top end of the carry bounced back a little bit today, but still way down from the recent high at 8.9. And we see the front end of the curve dropping a little bit as well. The end of the day, we did close with the forward yield on volatility back at negative 1.8%, but it struggled staying negative throughout most of the trading session. So there's definitely still demand for long volatility. Generally speaking, these peaks of positive volatility within the bull run, like the positive yield on volatility within the bull run, are very short. Um, but if that long vol demand continues, we could see something more akin to what we saw in April, where the forward yield on volatility continues to rise. So anytime we're in this range, it's a good thing to keep an eye on. Skew dropped again on Friday. Probably snap back a little bit today with some more put selling. Obviously, breadth is complete shit. About 50% of the S&P is still above 50, almost 52% of the S&P is still above its 200-day moving average. However, 20-day moving average and 50-day moving average um, both fell pretty dramatically, and I don't think today bounced those back too hard. I would bet the breadth is pretty narrow still, given the rise in tech, kind of beating everything else out. After Friday's move, bond correlation between VIX and cash VIX flipped back to positive. Obviously, VIX came down really, really hard today. However, the correlation is still not that positive. And so I would continue to keep an eye on this until, correlation gets to a level where it's like statistically significant, generally, and that's also generally the period in which you see larger moves in volatility. As that moves out. 2024 might be kind of a bad example, but December of 24 into end of December is a pretty good one. Back here also like March of 23 is a pretty good one. So generally speaking, you either get several spikes on vol and like bullish continuation, or you see like a larger move on volatility that's more dramatic. When rich from LNZA, I don't know, like 2030, 2035. You'll be good, right? Fed fund futures still pushing back up. I think like 99% chance of a cut for October right now, or 98%. Not much of a change in the 10-2 year because those weren't open today. Leverage actually dropped off a little bit today, even though the index bounced back, and that might actually be a clear sign of some weakness. If people aren't levering up on the bull side here to push higher, um, that's probably not a good sign for a reversal. And then out here, we just like kind of a doji day in between the 20 MA and the 30 EMA, which is somewhat stable but not particularly bullish. Failing to reverse back to 6,700 has me looking a little bit more towards the downside. If we retest the 30 EMA, it may fail. Right, we broke through it on the first test. We got support at it today, but a third test down there may not be so bullish, and that opens up a move down towards the 50 MA and what is now the bottom of the 2022 trend, or top of the 2022 trend. Obviously, losing the 50 MA, that's where a correction really starts. I would say if you wanted to look for a specific level for that, 65.08 is very important. That's the top of September's or August's price action. And then I would look to the low of September around 63.60 right here, where September opened and bounced. That would be the next level to the downside to confirm. And then where we got bounces back in July and August around the 6,200 level. Anything that fails that 1929 trend out here, that would be very bearish. That would be the start of like a major correction, and that would open up a move back towards possibly April's lows even. So but in the near term, let's focus on these levels, not speculate out too much further. Anyway, I think that's it. So thank you guys so much for tuning in, and I will see you bright and early tomorrow. Later.